Welcome back to the deep dive. We're here to plunge into those really complex topics and, well, pull out the insights that matter for you. Real estate markets, let's be honest, they can feel like a tangled web sometimes, right? Just a whole mess of numbers, shifting sands, conflicting signals. It's where, your gut feeling often clashes with the hard data, leaves you scratching your head. But today, we're not just cutting through the noise. We're going deep into one of California's most unique spots, unraveling some surprising twists.
Yeah, our mission for this deep dive is to really untangle the complexities of a very specific, always evolving market, Mammoth Lakes, California. We're looking at it right now, September 2025. We've got a fresh market update right here, and we're going to pull out the most important bits of knowledge, the key insights. Think of it as your shortcut to really getting what's happening on the ground, arming you with clear, actionable intelligence. So whether you're maybe thinking of buying, or perhaps you're a seller planning your next move, or maybe just fascinated by these mountain resort dynamics, we're peeling back the layers today.
We'll look at how different price points, different property types are behaving, and what that actually means for you and your goals. Okay, so let's unpack this, starting with the big picture shift, because it's quite a story. Mammoth Lakes, it came into 2025 in what most people were calling a relatively balanced housing market. Felt pretty stable.
Yeah, equilibrium.
Exactly.
Yeah.
Buyers and sellers both felt like they had a fair chance. But then mid-year, things pivoted
Yeah.
dramatically. After almost 3 years of, historically low inventory,
Oh, yeah.
remember how hard it was to find anything?
Oh, yeah. Very tight.
Suddenly, we saw this noticeable jump. Both condos and single-family home listings just popped up in May.
Right.
And it wasn't a blip. That trend kept going right through the end of July.
Yeah. Sustained increase.
So now, inventory is sitting right around the 10-year average, which is remarkably similar to what we saw before COVID turned everything upside down. That's a huge shift, isn't it?
It absolutely is. And what's fascinating here is what that inventory surge implies. You see, on the surface, this general rise in listings, it pushes the market into what many would just call a buyer's market.
Which sounds great for buyers.
It can be, but, and this is crucial, the truth is the market feels really different depending on the specific price point and the type of property you're looking at. Just to clarify for everyone listening, a balanced market, that's where supply and demand are roughly equal. Buyers have decent options, sellers get fair value.
Yep.
A seller's market, that's low inventory compared to demand. Sellers have the leverage, you get bidding wars, that kind of thing.
Right, we saw that for a while.
Exactly. And then a buyer's market, which we're seeing in some parts now, means more supply than demand. Buyers get more choice, more negotiating power. Understanding that nuance is absolutely key here. You can't just slap one label on Mammoth Lakes right now. It's not a monolith.
That's a really powerful distinction. I mean, you can't just look at the headline number. So let's dive deeper then. Let's talk about the condo market specifically, because this is where things get really interesting, really segmented. Given that overall shift we talked about, where's the heat right now? Where's the most activity concentrated in the condo space?
Well, the data is pretty clear on this. Condo activity is definitely strongest in that $500,000 to $1 million range. Demand there just keeps outpacing expectations, honestly.
Okay, the $500K to $1 million mark. Why there specifically?
It seems to be that sweet spot for a lot of buyers. It's, a more accessible entry point for owning in Mammoth, maybe for a second home or an investment property. You're not quite at the single-family home price point or the really high-end luxury condos. These properties often offer a good mix of amenities, location. They're just consistently attractive.
So those are the ones, like you said, flying off the shelves.
Yeah.
But what about the overall condo inventory? Where does supply sit across the different categories?
Yeah, looking at the broader inventory context for condos is quite revealing. For most categories, especially, say, from the upper end of that $1 million mark up to maybe $1.5 million, supply is sitting between 6 to 8 months. Now, that's not a huge surplus, but technically it does place them just beyond what we'd call truly balanced. It edges them into buyer-favorable territory.
6 to 8 months, okay.
Yeah. But, and here's the really interesting exception, the luxury segment. We're talking condos over $2 million.
Ah, the high end.
Exactly. Here, there's very limited availability. It's created only about 4 months of supply. And that pushes that category solidly into seller's market territory.
Only 4 months over $2 avs. Wow.
Yeah. These are often unique units, premium views, top-tier amenities, maybe newer construction. They appeal to a very specific, affluent buyer who's frankly, less sensitive to the broader market shifts. They want that property.
So it's a totally different game up there.
Completely different.
Okay, so here's where it gets really interesting when you contrast that. You mentioned the $1 to $1.05 range edging towards buyers. What about the next step up, say $1.5 million to $2 million?
Right, that mid-range luxury segment, if you will. Those condos, priced between $1.05 and $2 they're experiencing much longer selling times.
Longer times, why?
They're dealing with higher inventory levels right now, and that's noticeably softening demand. So you've got this real split. Luxury over $2 is booming, this mid-range is softening, and the entry level under $1 is holding strong.
That really paints a picture of a fractured condo market.
Yeah.
What explains that divergence? Is it different economic factors for these buyers or just inventory?
It's a great question, and it's really a combination of things. For the true luxury market, the buyers are often cash-rich, less reliant on financing.
Less sensitive to rates.
Exactly. They're focused on specific features, prestige. They'll pay for limited high-quality inventory. But that mid-range, the $1, $5 to $2, that's often where buyers are more sensitive to both inventory and financing costs. With more options available now and maybe facing higher mortgage payments, they can afford to be patient. They're less likely to jump looking for real value or maybe an incentive from the seller. So yeah, it's inventory and different buyer motivations at play.
That really helps connect the dots. Okay, so we've sketched out the landscape, the hot spots, and the cool spots in condos. But let's get into the hard data to really feel the pulse. Let's look at sales activity. Back in 2024, 243 condos sold. That averages out to just over 20 a month. Now, through August of this year, 2025, we've seen 154 condos sold. That's averaging around 19.25 per month. So closings are just a touch under last year's pace. Not a huge drop, but a subtle slowing.
Right, a slight dip.
And digging into that 2025 number, 141 were resales, only 13 were brand new construction. Now, median price always tells a story. 2024 median condo price was $725,000.
Okay.
Through August 2025, that figure rose to $810,000 for all sales combined. But here's the crucial breakdown. Resales had a median of $750,000.
Right, a modest increase.
All new construction median price, a huge jump to $2,150,000.
Wow. This is an interesting difference, isn't it? More than double the median for new builds. That difference is definitely something to watch. It really hints at different expectations, different market dynamics for new versus existing. You know, it highlights how new construction commands that premium, often for modern design, new amenities, that peace of mind of being the first owner.
Makes sense. And speaking of time, let's talk days on market, or DOM, how long things are sitting. Condos sold through August 2025 averaged 62 days on market. That's actually down from 72 days in 2024.
So quicker overall, surprisingly.
It sounds like it, but again, segmentation is key. Resales moved at an average of 62 days.
Okay.
While new construction, it lingered for a lengthy 345 days on average.
Oof, nearly a full year.
Nearly a full year for new builds. That's a staggering difference compared to just 2 months for resales. What's driving that massive gap? Is it just price or something else with new construction here?
That's a fantastic question. And yeah, it catches people off guard. Price is definitely part of it. New builds cost more, as we saw. But it's also a different sales philosophy. Developers often hold pretty firm on their pricing. They're less likely to negotiate down quickly compared to an individual seller. They're selling a vision, right? A brand new experience. And their buyers are often willing to wait for exactly what they want. Plus, it's really common for new developments to list early, sometimes way before they're finished.
So the clock starts ticking sooner.
Exactly. That naturally extends the reported DOM compared to a resale that's ready to go. And, you know, developers might not feel the same urgency if their financing allows them to hold units. They can wait for the right buyer at the right price.
That adds a lot of clarity to that huge DOM number. Okay, and looking at current inventory right now, September 1st, 127 active condo listings. That's down just slightly from 130 last month.
Okay, stable there.
But pending sales are up a bit, 39 pending now compared to 37 last month. And 7 of those are new construction.
So new builds are moving just slowly.
Slowly but surely making their way through. Yeah, sounds like a real mixed bag of opportunities in the condo world. Okay, let's pivot now. Let's shift focus to single-family homes. It's a different story, but as you said, equally segmented here in Mammoth.
Yeah.
Where's the action for single-family? What price points are buzzing?
For single-family homes, the activity is definitely strongest for properties priced under $1.5 million.
Under 1.5, okay.
Yeah, that's where buyers are still competing pretty actively for well-priced properties. Similar to those lower to mid-range condos, this seems to be the sweet spot for families or individuals looking for maybe a permanent residence or just a second home in Mammoth. The demand for detached living, especially for homes that offer good value and aren't in that ultra luxury bracket, it just stays consistently robust. Buyers want that quintessential mountain home feel, and they know a good deal when they see it.
So even with more inventory overall, those, let's call them more attainable single-family homes, are still hot tickets.
Pretty much, yeah.
What about the other end, the really high end?
Right. Above $3 million, though, homes are taking much longer to attract offers.
Okay.
It reflects a noticeably slower pace at the very top end. These are often discretionary buyers. They might have more leverage. They're less inclined to rush.
Big investments.
Huge investments. And buyers in the segment are often looking for very specific things: views, acreage, unique features. They'll wait for the perfect fit rather than compromising. And frankly, they're less affected by interest rates, more by overall economic mood and their own investment plans. So inventory might be there, but buyers are taking their time.
Makes perfect sense. Yeah. Okay, let's hit the key data for single-family homes then. Sales activity. 58 sold in all of 2024. That's just under 5 per month.
Right.
Through August 2025, 43 single-family homes have sold. That averages out slightly higher, 5.38 per month.
Huh. So slightly ahead.
Yeah, interestingly, they're actually slightly ahead of last year's pace, which is a key difference compared to condos, and maybe a bit surprising given the market shifts. What do you make of that?
It is telling, isn't it? It suggests a couple of things, I think. First, the underlying demand for single-family homes, especially the well-positioned ones, is just incredibly resilient here. Even with more inventory overall, these homes meet that desire for space, privacy, long-term value that many buyers really prioritize. It could also mean that single-family sellers have maybe been a bit more agile in adjusting their pricing to meet the market, or maybe the really good ones are just getting snapped up quickly by a steady stream of serious buyers.
Okay, and median price for single-family. It's remained remarkably stable. $30,300,000 was the median for 2024. And it's still $1,300,000 through August 2025.
Wow, dead stable.
Yeah, suggests real resilience in that core value, even with more inventory. Not seeing those wild swings or that huge new build premium like with condos.
And when we look at their days on market, single-family homes averaged 73 days to sell in 2024.
Right.
The median DOM through August 2025 was 63 days.
It's faster there, too.
Yeah, similar to condos, actually. A slight decrease in the time it takes to find a buyer. This tells us that while some segments might be slower, well-priced single-family homes are still moving relatively efficiently. That stable median price combined with a slightly faster DOM, it suggests the single-family segment, especially below that luxury tier, is pretty robust in attracting serious buyers.
Good to know. And finally, current inventory for single-family homes as of September 1st. 30 active listings. That's up just 1 from 29 last month, and we see 6 pending sales.
So, still pretty tight compared to condos.
Yeah, exactly. Especially compared to those historic lows we saw for years. It means selection is better for buyers, but it's definitely not a flood of options. But pulling all these pieces together, what does it all mean? What's the broader story for the Mammoth market? Let's bring in some of those wider factors, starting with something that could be a real game changer. Mortgage rates. We're seeing a new low for 2025. As of early September, rates are hovering around 6.45% to 6.50% for conforming and jumbo. That's the lowest since last October. What's driving this and what effect is it having?
That drop is significant, yeah. It's mostly driven by evolving economic data, market expectations about inflation, and maybe what the Federal Reserve might do next. Basically, the market's starting to think inflation might be easing, so maybe the Fed won't be as aggressive with rate hikes or might even think about cuts down the road.
Right.
For buyers, this translates directly into easier payments. Even a half-point drop can make a big difference in purchasing power, or maybe make a property affordable that wasn't before.
Especially in a place like Mammoth with higher prices.
Exactly. So it's opening up more refinance opportunities for current owners and, crucially, making more purchases viable for new buyers, particularly those needing financing for those higher price points. It definitely injects some fresh confidence.
And despite all these, nuanced shifts and segmentations we've talked through, it's worth repeating. Pricing overall is stable. We actually saw median prices rise for both condos and single-family homes compared to 2024.
Holding strong.
And marketing time, the DOM, is remarkably similar now across both. 62 days for condos, 63 for single-family. So while the market feels different in segments, the actual pace of sale, once something is listed and priced right, seems to be converging.
Yeah, that's interesting. But if we connect this to the bigger picture, especially for a place like Mammoth, we absolutely have to talk about insurance.
Ah, yes. The ongoing challenge.
It really is. Wildfire risk, tighter underwriting, it continues to demand early planning and really proactive coordination from everyone involved.
It's not just a minor detail, is it?
Not at all. It's a potential gatekeeper for deals. For buyers, just getting comprehensive wildfire coverage in certain Mammoth neighborhoods can be a serious hurdle. We're seeing fewer traditional insurance carriers willing to write policies here.
So what are the options?
Often buyers have to go through the state's VAIR plan, which can be more expensive, maybe less comprehensive, or they need specialized brokers. This can add thousands to your annual costs, and critically, it can delay or even kill financing if you don't tackle it right at the beginning.
Because lenders won't fund without insurance.
Exactly. Lenders need that proof of adequate insurance. So it's a prime example of how these local nuances become major sticking points in a deal. Needs an early start. Needs expert guidance.
That's such a critical point for anyone even thinking about Mammoth. Okay, so with all these insights, what does it mean directly for you, the listener? Whether you're in the market or just watching, let's break it down for buyers first.
Absolutely. Look, for buyers right now in Mammoth, the landscape is generally better than it's been in years. You've got more selection, more choice, less pressure to just grab anything.
Okay.
There's less competition in certain price bands. You won't always be in a bidding war, especially in that mid-range condo area or the high-end single-family spots.
Right.
And of course, you're looking at potentially better payments thanks to these lower rates we just talked about. So it's a powerful combination of factors. More strategic, potentially more affordable purchases are possible, but you still need to be ready to jump on those well-priced properties in the competitive segments. They still move fast.
Good advice. And for sellers, the message seems equally clear. Strategy and pricing matter more than ever. What should they be doing specifically?
Yeah, for sellers, it's definitely not just list it and they will come anymore. Not in most segments. You need to position your property exceptionally well within its specific segment. That means professional staging, high-quality photos, targeted marketing. Those are table stakes now, not extras. Realistic pricing from day one is also critical. Overpricing just leads to sitting on the market longer, probably facing price cuts later anyway.
Makes sense.
And furthermore, sellers should really consider offering terms, things like seller credits towards closing costs or maybe mortgage interest rate buydowns. These can make your property really stand out.
How does a buydown work? Quickly.
Basically, the seller pays a lump sum at closing to temporarily lower the buyer's interest rate for the first year or two of the loan. It makes the initial payments much more manageable for the buyer. So it makes your property more attractive financially, often without having to drop the actual sales price. It's about thinking creatively to meet buyers where they are today. And, this really raises an important point for anyone looking to make a move in this kind of complex environment. Navigating these conditions, especially this segmented market where it feels different depending on price and type, it truly underscores the value of teaming up with an educated, experienced local realtor.
Someone who knows Mammoth inside and out.
Exactly. They bring that hyperlocal knowledge, understanding specific HOA rules, rental restrictions, navigating those tricky insurance issues we mentioned. That can make a huge difference in actually achieving your goals, especially here in Mammoth and the Eastern Sierra, where local expertise really can mean everything.
And that just about wraps up our deep dive into the Mammoth Lakes real estate market for September 2025. It really is, as we've seen, a complex tapestry. Shifts, opportunities, distinct micro-markets. It offers challenges, but also unique advantages depending entirely on what you're looking for and where you're looking within this dynamic place. Hopefully, we've untangled some of the critical threads for you today, giving you a clearer picture.
And as you think about all this segmentation by price, by property type, maybe consider this. How might those unique local factors keep shaping things? Think about the highly seasonal demand you get in a resort town like Mammoth, or the specific impact of new local amenities, or maybe future development projects, or even the ripple effect of those new construction units finally selling. How might these create even finer micro-markets within the broader trends we discussed? It makes it so essential for buyers and sellers to understand the specific, granular value of a property way beyond just the median price to really succeed in this unique market. Something to mull over until our next deep dive.